Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. On the line with us today is returning guest to the program, Peter Schiff. He's the head of Euro-Pacific Capital. Peter, welcome back to the program.
Oh, thanks for having me on your program again.
I take it that you're back in Puerto Rico and the storm did not get you too bad there.
No, I came back on Saturday night, so, the storm had already passed, and fortunately, it never really made it to shore in Puerto Rico. It really devastated some of the islands that are not too far away, particularly the British Virgin Islands, which are very close to Puerto Rico. The eye went right over and decimated the island. So quite lucky that the storm was just far enough away. We got some wind and rain, and of course the power is out. In fact, the power is still out in this neighborhood. The street lights are still out. My house has no power. Fortunately, my condos, there's a generator at the resort, so I've got electricity here, but there's still no cable television. So a lot of things are still here. But, this is not really the hurricane. This is simply bad infrastructure in Puerto Rico. This is the government that did this damage, not Mother Nature. If we had, a privately run power company instead of the government, I'm sure we'd be fine. In fact, look at all the money the power company has borrowed. All this debt. What did they do with all that money? Because they certainly didn't spend it on the power grid.
Well, I think you'd probably agree with me after living in Puerto Rico for some time that compared to the other islands in the Caribbean, the infrastructure is pretty amazing.
Well, Puerto Rico is more of a real city. I mean, it's not just a little tropical island, with dirt roads and there's a major metropolitan area here, but. Certainly it could be in better shape if they had less local government and more free enterprise.
Absolutely. Well, since we're on the point of debt and the United States government just crossed that 20 trillion mark, I think that's a good place to start and just talking about that and the confidence of the dollar, which has started to break a little bit. Peter, what's your thought on everything going on right now around the dollar?
Well, we didn't just cross 20 trillion, we just blew right through it. Because we're almost at 20.2 trillion. So we're on the road to 21 trillion. And this is bad for the dollar. And, also we've got the Treasury Secretary, Mnuchin, out there threatening China with sanctions if they don't abide by our sanctions on North Korea, threatening to shut them off from the U.S. banking system, from access to, dollars. And, meanwhile, they're sitting on trillions of them. They're our biggest creditor. And that certainly will make the Chinese and everybody else rethink their exposure to the dollar. Because, when the world is using the dollar as a reserve and it's so integral to the global economy, the world is giving a lot of power to the United States. And if the United States is using that power in a way that other nations don't like, it gets them to think about why they're giving us such a big club if we're going to bludgeon them with it.
Peter, gold is finally starting to move. A lot of the reasoning behind why gold should move has been in place for years now, but I want to get your take on what it is that's finally moving the needle and if you think this will continue.
Well, the dollar has been very, very weak this year. It's off to its worst start since 1985. The dollar is down over 10% this year. So that's a big factor in what's driving gold. I mean, gold prices are up maybe 16%. So it's not just the weak dollar. Gold is rising against other currencies. But I still don't see any real, conviction buying gold. Personally, my company, Schiff Gold, our sales are off about 80% from last year. Americans are just really shunning gold this year. They're not buying. And this is, pretty much typical. The decline we've seen at my company is the same type of decline that we've seen industry-wide. I mean, the gold business is really hurting. Ever since the election of Donald Trump, people have just decided that there's no reason to buy gold because they believe that things are going to get better. Of course, they're wrong. Things are going to get a lot worse. And as far as the big speculators, I haven't seen a big rush of any kind of hedge fund money, institutional money into gold. I don't think any of the shorts have covered yet. So I think we're still, climbing a wall of worry. I think it might take a move above 1,400, which I think is coming maybe before the end of the year to really, get this into a new gear.
Yeah, it's pretty exciting having gold and the other commodities moving as they are, and yet sentiment still being so poor and feeling like so few people are in the trade. That must have you thinking that this could be a very long-term move as people start to actually pile in.
Oh yeah, I mean, once people realize what's going on, I mean, for a long time it was the rates. Fed was going to raise rates, and that caused people to think gold was going to go down, and they thought that higher rates would be bullish for the dollar, and that would be bearish for gold. And the biggest consensus trade when the year began was long the U.S. dollar, and that's already blowing up. And part of that trade of being long the dollar was being short gold, and I think as the dollar trade seems to be blowing up first. I think the short gold trade will blow up next.
Sticking to government numbers on inflation, I believe the UK just posted that the inflation levels were somewhere between 2.5% and 3%, and that in fact was above what they wanted all of a sudden. Do you expect this trend of inflation actually picking up on the government numbers to happen in the US as well?
I do. I mean, the UK is actually up at 2.9% is the official rate over there. And yeah, I think it's going to go higher. I mean, I think it's going to go through 3%. And it's amazing, because when the inflation rate was lower, maybe below 2%, they were panicking. Oh, it's not high enough. We need to do something, which was so ridiculous because there's nothing wrong with 1% inflation. It's better than 2%, and 0 is better than 1. But there's no reason if you're at 1 to try to get it to 2 because you also risk overshooting, and then you go to 3, and then you go to 4. And now what are you going to do? So they've created a problem where they're ultimately going to have to raise rates a lot more because they tried to get the inflation rate to move up, which they didn't need to do in the first place because there was no threat from the inflation rate being lower. But now they've created a much bigger threat because of how much higher it is.
Continuous monetary stimulus like going on could drive the stock market higher than it already is. You've said in the past that you thought the stock market could have a correction or a serious correction, a crash. But what is it that you think is going to actually cause that at this point?
Well, I don't know if the stock market's going to crash. I've said that. I mean, it's overvalued and it should crash. But, you have the wild cards of the Federal Reserve and how they would react preemptively to kind of prevent the crash from happening. And then you also have the fact that I do believe the dollar is going to crash. And so the dollar could crash more than the stock market. And so the stock market doesn't actually go down. I mean, because you're just measuring the stock market in dollars. And if the dollar is smaller, well, that's going to change, the value of the stock market. It's like if I try to measure my height with a ruler and the ruler is shrinking, it's going to look like I'm growing, but I'm not growing. I'm just measuring myself with a smaller ruler, so it creates a false reading. So if you see a big drop in the dollar, it may mean that the stock market doesn't actually go down in terms of dollars, but it is going down in terms of actual purchasing power.
Peter, moving back over to gold, gold stocks have not really been performing as I would expect them to, with gold up $150 in the last few months. I mean, they're certainly starting to move up, but one would expect there to be quite a serious rally to ensue. I know you've got quite a few chips in the gold stock sector, and you've got some products there for retail investors. Do you expect the gold stocks to start moving soon?
Well, I mean, the gold stocks are already moving. They're just not moving as rapidly as you would think. I think, my gold fund that we manage, the 0% gold fund, is up better than 20% this year. And so it's still, gold stocks are doing better than the general market. And it's certainly, the Dow, the S&P is up a little over 10%. So you're getting about double the return on the S&P by being in gold stocks. But given how strong gold is up this year, I mean, physical gold is up about 17%. So you would expect gold stocks not to be up 20%, but 50% or more in an environment like that. So gold stocks are not getting the bid that they should be getting given the strength of gold. And I don't even think gold is as strong as it should be. So once gold really starts to break out, and then not only do gold stocks start moving the way they should be, but they have to recover the lost ground. They have to make up for the gains that they haven't registered because everybody is so skeptical. I think that you can see some spectacular moves in this sector as money really starts to move into a very, very small space.
Peter, if I don't bring up the crypto space, I'll probably lose 5,000 views on this interview. People have been clamoring to your content, anything crypto. I just interviewed Doug Casey, and Doug said that he'd put a little bit of money into the space to speculate, and he likes philosophically the idea behind what the blockchain could do, but he is concerned about the prices, as I know you've said. One profound statement that he made, though, is that he thinks that Bitcoin is working as a way to educate people and is actually going to drive the price of gold to astronomical highs at some point. Have you given any thought to that?
Well, I mean, obviously there are a lot of people now that are thinking about things like fiat currencies who never even knew what a fiat currency was until Bitcoin came around. So I think that the Bitcoin community, in their, efforts to drive up the price, right, of Bitcoin has educated people to understand, some of the problems and risks that surround our current monetary system. It's just that cryptocurrencies aren't any better. I mean, they don't really eliminate the inherent flaws in the fiat system, because the real problem with fiat money, other than the fact that the governments can just create it at will and have used it to create all sorts of asset bubbles and to fuel expansions of government, the basic problem is that the currency itself has no real value. It simply exists based on faith, based on the idea that the currency will always be accepted by others as payment for goods and services. So it's a faith-based system as opposed to a commodity-based system where money is actually a good, right? I mean, that's where money came from. It evolved out of barter, where people would trade one good for another, but people found that, hey, let's just find one commodity that we can price all other commodities in, and we can use that as money. And so there was all sorts of commodities that have been money over the centuries. But gold stood out as the best money because it was the commodity that was most suited to being money. But Bitcoin, doesn't have any of the characteristics of a commodity. It doesn't have any value of its own. The only value that Bitcoin has is the belief that people have that other people will accept it in the future in exchange for other goods and services that do have value. So it's all based on faith. It's all based on confidence, and that can go at any minute. I mean, even though the dollar's value is based on confidence, you have a long tradition of people using dollars. You do have a lot of confidence in the dollar. Even though it's losing value over time, it's been around for a long time. There's traditions. You have prices in dollars. Wages are denominated in dollars. Rents are in dollars. Bonds are in dollars. Insurance policies are in dollars. You have a whole big infrastructure. And people have a way of referencing dollars. If I were to come to you and say, oh, I'll give you $100 for something, whatever it is, you have an idea of knowing, is that too much or too little? I say, I'll give you $100 for your necktie. You could say, well, I paid $50 for this necktie. Yeah, I'll sell it. That's obviously it's not worth $100. Or no, this is a $200 Hermes tie. It's worth more than $100. Or you have a way of understanding relationships between dollars, and even the price of a movie. If you go to the movie theater and the guy says it's $50 for a ticket, I'm not going to pay $50 to go see a movie. A movie should be $12, or you have an idea of what they cost, even though it costs a little bit more every year. You still have an idea of what's a fair price for a movie ticket in terms of dollars. You have no idea what's the fair price for anything in terms of Bitcoin. Nobody knows. There's no history of Bitcoin. You can't relate the price of anything to Bitcoin. And, this thing is going to fall apart. And a lot of people are going to lose a lot of money. Now, the question is, are they going to just go back to fiat, or will they recognize, hey, you know what? All the reasons that we went into Bitcoin were valid. It's just that Bitcoin was not the solution to the problem, and then they migrate over to gold instead. Because that's what people should be doing. People who are worried about the euro or the dollar or any currency, and they're worried about inflation, they should be buying gold. And, one of the things that the people in the Bitcoin community say is, well, but gold is, you got to lug it around. I mean, I can't use my gold, to buy a cup of coffee. Oh, yes, you can. It just all depends on where you store it. Right? If you use a company like Gold Money, where you buy your gold there and they store it for you, you have it in a digital wallet the same way you could have your cryptocurrencies. And I can actually transfer real gold, ownership of real gold sitting in a vault in Switzerland by Brinks. I could transfer my real gold to somebody quicker and cheaper than you can transfer Bitcoin. So if I want to buy a cup of coffee and pay for it in gold, and if the coffee merchant wants to sell me coffee and accept it in gold, we can have that transaction quickly and for less cost than doing it with Bitcoin. And what's changing value is real gold. The guy selling me coffee knows what he's getting. He knows he's getting actual gold, and he has a way of pricing his product in another commodity like gold. So if you really want what Bitcoin is promising but can't deliver, gold money enables people to do that with actual gold. So why settle for some, digital, a wannabe gold, some type of replica, when it doesn't actually have any of the real properties that made gold money and made it, the most successful form of money that the world has known.
Peter, assuming you're correct that Bitcoin is nothing but a fraudulent bubble, if you look on the one side, sure, the price chart is somewhat parabolic right now, and there's some less than intelligent money that's profiting off of it. Those are both signs of maybe a bubble. On the other side, there's very few participants in the Bitcoin space on a global basis, percentage-wise, the population worldwide. I mean, it's not even close to what you had in something like the tech bubble. So, I mean, how do you balance these out to think of how much longer this could last?
Just because the crypto bubble, and you can't just think of just Bitcoin. You got to think of all the cryptocurrencies, and the market cap of all those cryptocurrencies at its peak was almost $200 billion. So that's a pretty sizable bubble. You can't just say, well, because it wasn't as big as some other bubbles, then, it's got a lot more to go. I mean, not all bubbles have to be the same size. I mean, I don't know how many people in the world were involved in the Beanie Baby bubble. I mean, it was a bubble. I don't know, how big it was as far as, what percentage of the population actually owned Beanie Babies. But I do remember lots of people who owned them thought that they were going to send their kids to college based on the profits from their Beanie Babies. And so, bubbles don't have to encompass everybody. And, the crypto bubble, I mean, yes, it could get bigger, but then it could already be imploding. We don't know. Look, Bitcoin got above 5,000, a few weeks ago. And today the low has been 3,800. So we're down, 22% or 23% already from the highs. I mean, technically, that would be a bear market again. Now, the last time we had a 20% drop, pretty much the bear market ended, just as it began. But I don't know. We'll see what happens this time. I think a lot of hedge funds have taken, positions in Bitcoin recently, and I don't think that's the smart money. I think these guys are just greedy. I think they're trying to make a quick buck. They're following their herd. I mean, I don't understand how anybody could be buying Bitcoin at 3,000, 4,000, 5,000 that didn't buy it a few years ago at 300 or 400. I mean, who is just finding out about Bitcoin? I can't believe that these hedge funds that are buying it now didn't know about it 2 or 3 years ago. So they knew about it 2 or 3 years ago. They didn't want to buy it when it was 300 or 400, but they want to buy it when it's 4,000. I mean, what kind of craziness is that? I mean, all that is pure greed, right? Because now all of a sudden they're buying into this hype, $50,000 of Bitcoin, $100,000 of Bitcoin. And, these hedge funds, a lot of these guys, they love to speculate because it's not their money. See, the hedge fund model is you take a big risk with other people's money. And if it pays out, you get 20% of the profits. So I think this is very tempting to a lot of people. Hey, let me just throw some money at Bitcoin. And if it goes way up, I can make a ton of money for myself. And if it collapses, well, I've just lost my client's money, right? No big deal. So I think you've had a lot of speculators get in. And we'll see what happens. I mean, if we, I see some bids in there around 3,800. There were some big bids up there. But, there was a lot of support at 4,000, I thought. And now that, we broke that dam, let's see how much water is going to go through this hole. But I think if we take out those 3,800 bids, I mean, maybe we drop below 3,000 very quickly. We'll see what happens down there if they're still buying, if there's not, and we go back below 2,000 and this thing is down 60%. I don't know if a lot of these guys might decide to cut and run. And there could be people that bought up there that might want to blow out of it down there and take their losses. And, we'll see how deep that market is. I mean, remember, a lot of times when you have assets that are dropping like stocks, you got a lot of shorts. And so when the market starts to go down, the shorts cover, and that helps support the market. There's not a lot of shorts in Bitcoin. So there's not a lot of people who are going to be covering these shorts. So it's just long is liquidating. And look, this could be a real bloodbath.
Peter, I admire your passion against the crypto space and, of course, your passion for gold. Before I let you go, any predictions or any advice for investors over the next few months pertaining to gold or just the overall market?
Yeah, I think gold's going to keep going up. And I do think that if the crypto bubble does really burst, I do think that is a positive for gold. I do think that the sideshow in these cryptocurrencies has stolen some of gold's thunder. I think some money that might otherwise have gone into gold has gone into cryptocurrencies. And also, I think that some of the people who were thinking about buying gold think, well, why should I buy gold? I mean, if gold's going to go up, the cryptos will go up even more. So I think that, you've seen that marginal demand switch. And so I think that when you see gold as a hedge, not only against fiat currencies, paper money, right, but as a hedge against cryptocurrencies, because now you're going to have a lot of people who have cryptocurrencies where the cryptos are losing value, and maybe they're thinking, you know what, maybe I should get out. And, where do you want to go? I mean, there's going to be some people that want to get out of cryptos into gold. It's not like they want to go back to fiat. They still are worried about fiat currencies. They've just now lost some confidence in Bitcoin, or maybe they want to just take some money off the table. You still have a lot of guys that got in early, a lot of libertarian-minded people that got in, even below 100, below 10. They still probably have a lot of paper profits, and they may think, you know what, the thing's down 50%. I don't know. It could go either way. Let me take a little money off the table. Where are they going to put their profits? They're going to put it in gold. Although, of course, in order for some people to take money off the table, there's got to be another sucker willing to put money on the table. And if the table turns cold, right, and everybody is losing, then there may not be a lot of people there to let the other people out.
And Peter, do you have a tool on your gold purchasing website to convert these worthless Bitcoin into physical metal?
Well, look, Schiff Gold, we subscribe to a service called BitPay, and a lot of people think, oh, Peter, you're a hypocrite. You're accepting Bitcoin. I'm not accepting Bitcoin. I'm making it easier for people who have Bitcoin to get rid of their Bitcoin, to sell them, and then buy gold, to buy real money for this crypto nonsense. And you could do that, too, at Gold Money. If you really want to own gold in a way that you can use it in commerce, you want to use gold as a monetary instrument for saving, for earning, for spending, then go to goldmoney.com, open up an account, right, and take your Bitcoins and exchange them for real money, right? You could do that at Gold Money, and then you'll own real money. You can get a free debit card, right? The debit card, it's a MasterCard. You could use it anywhere that they accept MasterCard. So you can spend your gold any place in the world that takes MasterCard. But more importantly, I think what's going to happen over time is you won't need your MasterCard. You'll just be able to directly transfer some of your gold using the app on your cell phone to the merchant who doesn't want MasterCard. Because if I have my Gold Money account and I use my MasterCard, the person who I'm buying from doesn't get any of my gold. My gold gets sold and the merchant gets dollars. But one day, merchants are not going to want dollars. When they realize that they can get gold cheaper than dollars, if you can get paid in gold, right, because gold standard is the gold standard of money. If you can be paid in gold, why would you accept anything else? So I think the future is that people who have Gold Money accounts will be buying goods and services from other people with Gold Money accounts and paying them in gold. And if you're a business, if you have a product that you're selling, including your wages, in fact, it's possible right now, if you have a job, you can have your paychecks directly deposited into your Gold Money account. But I think at some point in time, employers will be paying their employees in gold because the best employees will demand their payment to be made in gold. So the whole world can ultimately move to a gold standard. This is exactly what the cryptocurrency community wants. They all envision the world working on Bitcoin. That's never going to happen. There has never been a period of time where Bitcoin was money, but gold has been money for thousands of years, and it will be money again. See, when I'm saying that gold's going to be money, I'm not making a crazy leap of faith. I'm just saying that something that has worked for thousands of years is going to come back, that this experiment with fiat money that began in 1971 is going to end in disaster, and we're going to go back to the traditional money, but we're going to use the internet. We're going to use modern technology to make the gold standard even more efficient and easier to use today than it's ever been. But the people who are betting on Bitcoin being money one day are saying that something that has never been money is going to suddenly become money. And I don't see any precedent for that ever happening or any possibility for something to become money that was never valued as a commodity prior to it being money.
All right, Peter. Well, I have my microphone muted over here, but having a very good time listening. And I know there's going to be a whole bunch of comments on this video. So, Peter.
People get mad, and part of it is I'm raining on their parade. People who own Bitcoin don't want to be faced with the reality that this isn't their ticket to Easy Street. You have a lot of people today, young people who own Bitcoin, that think they're going to be multimillionaires if they just hold on to these Bitcoins. And they don't like me telling them that, there's no Santa Claus, that if you really want to be rich, you're going to have to work hard. You just can't buy a bunch of Bitcoins and sit back, right? People didn't want to hear from me when I was raining on the .com parade. They didn't want to hear from me when I was raining on the real estate parade. Nobody that's in a bubble wants to hear from somebody who's saying it's not a bubble, because psychologically they don't want that. All they want is more affirmation. They want people to talk about how great everything is. And of course, when you have this type of dynamic where you have something that's a bubble or like a pyramid scheme, like a naturally occurring one, you need more buyers, right? Bitcoin constantly needs more people coming in to buy to keep driving the price up. And so nobody likes me going out there and saying, hey, this is no good, because potentially I'm driving away buyers. Now, of course, not that many people really care what I have to say, but you have Jamie Dimon come out yesterday and say, oh, Bitcoin's a fraud, and, it's down 10, 20%, right after the guy talks. So I guess when Jamie Dimon talks, people listen, but when Peter Schiff talks, nobody cares. But,
yeah,
but I think I know a lot more about money than Jamie Dimon does, and I think I have a much better idea as to why Bitcoin won't work than he does. But the media pays much more attention to him, and apparently so do the Bitcoin traders, because I've been warning about Bitcoin for a while, and the price keeps going up, so no one pays attention to me.
Well, time will be the ultimate judge, and maybe you'll be spot on. Peter, thank you so much for coming back on the program, and get you back here soon. Hopefully, higher gold prices, and we'll see where Bitcoin goes.
All right.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?